Hey guys, listen. We're gonna be trading on the 1 minute chart today, so we need to be extremely cautious. Come on, I'm gonna show you. Come on. There it is. I see it. I've got the computer out here. I've got TradingView pulled up. Let's go trade the 1 minute chart. All right, so the 1 minute time frame. A lot of you guys know the way that I trade. It's DCA, grid, martingale, recovery trading. It's a bunch of different things. It's essentially like guess where you think the price is going to go. You think it's going to go up or down, and then use DCA as a risk structure. Now, DCA means adding to losing trades in a structured way, meaning you plan it out beforehand. You use small position sizing, betting on the fact that eventually price is going to have a reversion somewhere, allowing you to profit or break even in most cases. Now, I have a lot of videos covering my whole trading approach. You can go watch them on my YouTube channel. I also have a free Telegram channel. It's the first link in the description. All the stuff you're going to see in this video, I share my analysis live every day in the Telegram channel. It's link in the description. I'm going to put in the pinned comment too, and you can go and watch that. Now, let's go ahead and get into the actual trading approach. So we're going to go here to AUD USD on the 1 minute. We're going to hit the replay tool, and we're just going to go to a random bar right here. So random bar. And now here's the trading approach. So this is from June of 2024, so earlier this year. So the way this trading approach works is you use small position sizing. Now, small position sizing, come on here, let me let you in on a little secret here. You have to use a 0.01 lot size for every $2,000 in the account. That's what I suggest. Okay, this is not financial advice. Well, most of you guys are going to lose money watching this. You're never going to be able to trade this way. However, that works on higher time frames. I don't know how it's going to perform on this because we could very quickly get into trades where everything just screws up and then we don't win at all. Price goes really far in one direction and we blow the account. We're going to simulate that we have $2,000 in this account. Now, this is not realistic because ideally you'd be trading multiple pairs, obviously. However, we're just going to be trading one pair. We're going to simulate we have $2,000 in the account. We're using 0.01 lot sizes. We're going to try to double the account. We're going to see if we can double it or grow it. So let's go ahead and get into it. So I'm going to go back here, and then we can get here on the 1 minute chart. I think it's going to go up from here, so I'm going to buy, and I'm going to be using 1,000 quantity. Now, 1,000 quantity represents a 0.01 lot size. That's just how it's expressed in TradingView. So if you're using a broker like forex.com or Wanda or a broker that expresses the volume in terms of quantity instead of lot sizing, that's what that is. 1,000 quantity is 0.01 position, 0.01 lots. Make sure you're using small sizing if you're trying this. Otherwise, it's so easy to blow an account. If you're sizing small enough though, it's more easy to grow the account as compared to blowing it. But again, this just all depends on a lot of experience and stuff. So let's go ahead and get into it here. I'm going to buy with 1,000 quantity. Now, what is the plan? The plan is if it goes up, we just take profits. And if it goes down, we just... Now, we've just bought here. Now, what the plan is to just take profits if it goes up. And then if it goes down, we just add to it. I'm going to let this play out. This is the 1 minute chart. I'm going to be adding pretty quickly since it's on the 1 minute chart, so that way we can be able to capture a lot more volatility. So I'm going to add there. If it goes further against me, then I will add again. And if it goes and makes a new high, then we will be able to profit from that. So now it's gone lower, so I'm going to buy again. It's gone lower, so I'm buying again. So now we're sitting in a $2 drawdown. It's going down, so I'm going to buy again down here. It's come back up to the entry. I think it might be reversing from here. So let me go ahead and just liquidate. This was actually resulted in a loss. It should have been break even, but the fact that it's going so fast makes it kind of hard. We're going to enter a short position. I'm going to add here at the high right here. Set a profit target down here. I'm going to add again because we went to the next resistance zone. I'm going to add again up here because we just made a new high. I'm going to adjust the profit target. I'm going to add again because now we've gone even higher. Sitting in a $5 drawdown on a $2,000 account, guys. Really risky, okay? Let's go ahead and see how it works. The main struggle with the 1 minute chart is that there can be huge volatility spikes that are like 100 pips or more in one direction off major news events. And even just randomly that can happen without a news event. And so that's what makes it really, really difficult to actually make this work on the lower time frames. Then you can see you get caught into ranges. This position was started June 17th, and now it is still June 17th later in the day. So it's just price going sideways. So we're going to add again because it just made a little bit of a higher high. You really gotta be patient, I guess, here on the 1 minute chart. You know, the trades take like a month on the daily or weekly. They take like a day on the lower time frames. So this is pulled back towards the entry. I don't know if it'll be profitable or not. We're gonna have to let it come down further and see. Okay, so it's going lower. I'm trying to think of when to close this. All right, I was trying to close it at break even, but it looks like that spike happened too quickly. So we're still in this, and that's okay. Now we get some volatility. So I'm gonna add up here. I'm also gonna add with a little bit of a multiplier. I'm gonna add a little bit heavier. I'm gonna add 2 more positions here. Okay, so prices come down. Okay, so I'm going to close everything right there. So that ended up being a $5 profit. So guys, so far on this challenge, trying to double a $2,000 account using the 1 minute chart in DCA, just adding to losing trades. We have made $2. More specifically, we have made $1.91. Guys, we are living large. If you do that like 1,000 times, you'll be able to buy a nice little defensive tool like this so that you can trade the 1 minute chart safely. So let's go ahead and come on. We're going to get back into it. We're going to go back to the charts. We don't have time to play games here. We're trying to make money. You can obviously see we're doing very well right here, making $2. I don't really know which way I think this is going to go because it's in a range. So what I'm going to do is I'm just going to hit buy. Yeah, if you don't know what to do, just flip a coin. It's 50-50. It goes up or down. So we're using a 0.01 lot. It's going into some profit, a couple cents of profit. What I've noticed, okay, so here's what I've noticed. From the last little outcome we had to add a bunch of times. We got into like a 0.05 or a 0.08 position size, you know, whatever it was, you can go see. What I'm gonna do is I'm gonna start positions with a 0.02. That's right, I'm gonna be super, super risky here, okay? So I'm gonna go crazy here. I'm gonna double the position size. 0.02 for the first trade, then we can get into it. So I've done that, and I'm going to add to this first trade, so now we're in a total of like 0.03 lots. So we're going to see what happens. Keep on. Price goes up or down. So have a nice spike up. I'm going to flatten right there, and then I'm going to sell. And again, we're at a 0.02 lot. I'm going to sell again up here. Then I'm going to sell again right here. This is why position sizing is important, because they can have these huge moves, especially on a 1 minute. And this is really nothing. I mean, that's like a 40 pip move. It can be like a 100 pip spike in one direction. So add it again. We're in a 0.08 lot, so just under a 0.1 standard lot. And it's in a $4 drawdown. I'm gonna go ahead and set a profit target right here. The thing about DCA, I like using it on the weekly and daily because it's really clear. Like, a price makes a huge higher high on the daily or weekly, you can start a position there, and you don't really have to have a big position size. Like, I'm using like anywhere from 1 to 2 standard lots on like a $200,000 account for my first entries. It's just not like, you know, you just don't have to size that heavy because you're capturing more movement. On the lower time frames, you're capturing like a couple pips at a time. So like, if you're sizing small as well, you're sizing smaller and you're trading a lower time frame and you're capturing less movement. I don't know. Maybe if you're doing this with multiple pairs, you can have a bunch of different trades open at once and you can profit from the volatility. But just doing this with one pair, you know, I think between you and me, I think it's gonna be really difficult for us to actually be able to double this account in this one back test situation here, because again, it's not realistic. You can be trading a bunch of other pairs. If we could grow this account, let's say $250, right? I'm gonna cut it down almost 10x. Instead of $2 grand, I'm gonna say we're gonna just grow at $250. Then we're gonna say maybe you were trading 7 other currency pairs and maybe you made $250 from those other 7 pairs. Then you can go test it for yourself. Again, I don't recommend doing this, but I'm just saying, like, you have to size very small. So this is $23 of drawdown. I'm gonna add up here, and I've done a double size right there. So what this is it's just adding with a little bit of a multiplier. So it just means it's where you add a slightly heavier position size. Some people will call this martingale. It depends on what your definition of martingale is. Martingale is like where you double each position size as it keeps going against you, like 0.02, 0.04, 0.08, 1 point or 0.16, and that gets exponentially crazy. That doesn't work very well in my opinion. I don't recommend doing that. I recommend just using the same sort of position size and kind of just like layering. So it's like 0.01, 0.01, 0.01, and then 0.02, 0.02, 0.02. This means that whenever it finally does start pulling back, it doesn't have to have that big of a pullback to be able to get you out of a trade. That's what I like about this, because it means that the more price in one direction, the more likely it is to have a reversion back into profit. Let's see how long this trade has taken. So since we sold over here, June 18th, this is now June 19th. I've been in this trade one trading day. I'm sitting here for years for one trading day, seeing if this is going to work out. This is Asian session right here, so not much going on. I wish there was a way to make this go by quicker because it's so slow. But you know, imagine if we were doing this in like real time. You and I'd be sitting here in this YouTube video for like a week, just waiting for the trade to play out. It's ranging. The stuff like this can happen on higher time frames, but it's typically not. Like, imagine if this was a daily chart. This would have been ranging for like, what, 2 years? Something like that. So now it's starting to move again. Finally, getting a little bit of movement, going up and down, going back and forth. All right, so it's about to go back. If it makes a higher high, I'm just going to add again. This thing better start moving pretty soon. Better start moving or I'm not going to be happy. We're going to have to take some alternative measures to be able to make sure. So now it's pulling back. I don't know where I'm going to close this at. Let me kind of see. I don't think it's realistic to have the profit target down there. I'm going to put it just in profit like that, and we'll see what happens. And I'm also going to add to that since we just made a lower low. We made a lower low, then I had a pullback, so I'm going to add to it, anticipating that it might break through and come down lower. One of the cool parts about DCA, I keep on scrolling the other way, it's showing my screensaver, me and my girlfriend. One of the things about DCA is you don't really have to predict where price is going to go. You just have to make sure you're not sizing too heavily. Using DCA, recovery trading, grid trading, whatever the hell you want to call it, you profit from the volatility. That's all. So all that means is that as long as price bounces somewhere eventually, then you can get out of most outcomes in like either a break even or a profit or things like that. And as long as you can do that like at a very high percentage chance rate, then it means that most of the time you'll be able to finish a trade in profit or break even. And by most of the time, what do I mean? It kind of just depends on your own personal approach, or it depends on your stats. It depends on your, like the percentage chance that you're likely to get the initial move right, which we should just assume is 50%. What that means is that it looks like this hit the profit target. So I'm just going to hit buy randomly here. So what that means is that when you enter a trade, you should just assume you have a 50-50 chance of winning. Meaning like it's either going to go up or down, right? So if it goes up, there's a 50% chance that'll happen. If it goes down, there's a 50% chance that'll happen. It's unlikely that price is going to just keep going sideways in the same spot forever and ever and ever. Now that could happen, but we're not going to entertain that because that's not the reality. Price goes up and down. So if you just estimate your probability of winning a trade to be 50-50, then you can be likely to have it work out. All right, so in the interest of time, what I'm going to do, I'm going to start sizing a lot heavier. What you've seen this here is we've gotten out of all these trades in profit. Even this crazy spike of it went really far against us, and it went all the way to June 20th. So it was 2 trading days. We entered this one on June 20th. Now it's the end of June 20th, so this has been 1 day, and this is working out. It's about to hit the profit target. If it can just go a little bit higher, if it can just go a little higher, a little bit more. Once this trade concludes, I'm going to size up the positions again. I'm going to use 0.05. This is like ultimate militaristic, combative, just insane, aggressive, non-repentant position sizing. This is something that you really just have to be. I mean, you know, if you're a man, you gotta have balls to do this. I'm just saying. It's really, really, really a bad idea. But again, in the interest of just showing how this is actually going to play out, we should see. I've added twice at this area down here. Now price has gone back up. I'm going to go ahead and liquidate right there near the highs. So now we've made $27. So again, like I said, I'm going to start sizing up now. Instead of a 0.02, which seems to work okay for AUD USD during this period, looking at the 1 minute chart, using a 0.01 and 0.02. We've only made 27 bucks, but hey, that's 27 bucks. Imagine if you were doing this with 8 total currency pairs, right? So this pair and then 7 others, say. And imagine if on each of them you made $25, right? You would have made $200 over this time period on a $2,000 account that we started. And let's see where this actually started at, because I'm interested. So we started here on June 17th, and now it is June 21st. So this is 4 trading days. So if you would have had somewhat similar results and not blown the account on some of the other pairs, then what you could assume, and again, past performance does not indicate future results. I'm not a financial advisor. It's not financial advice. You're probably going to lose money trading. Don't listen to anything I say. But in my opinion, if you were able to make $25 on 8 total currency pairs, that's, yeah, it's $200 on a $2,000 account. It's not too bad. We're going to size up now. We're going to keep going. We're going to do it with a 0.05 lot size. Now, what do I do? Buy or sell? I'm going to go to random.org and I'm going to let the random number generator decide. 1 is buy, tails is 2. So 2 is tails. So we're going to we're going to sell right here. And that was a 2K. So let's go ahead. Let's just do 5,000 right here. We'll just do the same position here. So now we're in a 0.07 lots right here. And what we'll do is we'll set a target here to lower low. So you'll see it will win like $9, $10 if it goes down here. If it goes against us, where should we add? I'm going to go ahead and add right there. The thing is as you start sizing up, the drawdown gets exponentially higher. Again, this is okay because most of the time price has a reversion and it pulls back. But you just have to be careful because like you could not do this like using a $2,000 account and then starting your position with 1 standard lot. Because if it wins, great, you're gonna like grow the account 20, 30, 40, 50% or double the account or triple the account in one trade. That's if it goes in your favor that far, which is probably not. If it has any amount of drawdown, right, even just 10 pips of drawdown, that's negative $100. That is a and then if you start adding to it, you're gonna blow your account so quickly. So that's why I say like use small position sizing. It works for me personally. Maybe it'll work for you. I don't know. Test it out. So I'm going to sell again up here at a 0.05. Then it just made a higher high, so I'm going to sell again. And since we're at this resistance area, I don't know. We got a couple highs in here. You know what? I'm just going to leave this here. I'm going to put a target here at the next low and see how well it works. But you know what? I'm just going to add again. Horrible spot to add. I think it's best to only add in drawdown. This doesn't really work that well if you add in profit unless you're like somehow protecting the position with like a stop loss that's at break even or something. There's many ways you can do it. What I'm saying is I think it's better to add positions at better prices. Like that's dollar cost averaging. I guess you could like average into a trade, but like a lot of people say like add to your winning trades because it's gonna win. It's more likely to win. That works fine in the right context, but you do have to use like stop losses or some sort of system in case it reverts and pulls back because your cost basis, like your average position or your average price, continues to get worse and worse if you add to profitable trades. Again, there's nothing wrong with adding to profitable trades. All I'm saying is that as you start adding to winning trades, you get like, say you're in a bunch of buys and it's going up and up and up, you get really top heavy. So what that means is like you got your positions all averaged like higher and higher. The slightest bit of a pullback against you is going to net all the positions out at like a break even or even a loss. And then if it starts going against you, if you haven't put like some sort of a stop or a system in place to manage that, then it can quickly turn into a huge loss. That this is a winning trade that was winning very nicely can quickly turn into a huge loss. I don't personally add to winning trades much anymore. I think about maybe 1 out of every 20 trades that I take, I'll add to it if it wins. Meaning I'll add a position when it's in profit. But that means that it's if I'm okay with the risk structure, meaning I'm okay with adding that additional layer of risk. Should price go to the next DCA zone, instead of $1,000 drawdown, maybe now I'll have like $1,500 drawdown or like $2,000 of drawdown instead of that original risk. So this right here, we know we've added to AUD/USD, added a couple positions here. Let's see where we started it. Down here, the 23rd of June. This is the 25th of June. Had a nice move into profit. Let's see if it can go. The little profit target is right here at that next low. So we'll see if it can get there down to that next low. Just has to make this little lower low. So it did hit the profit target. So now guys, we made $72.64. Do not forget the 64 cents. It's very important. Every dollar counts, especially when the IRS is coming after you, asking, say, hey, you're doing really well trading. Let's see that capital gains tax. And then you have to show them your Schedule D. And yeah, that's a lot of fun. So right here, what are we going to do? Now we've made $72. Okay, so we made a portion of the $250. What I'm going to do is I'm going to do something even more crazy. I'm going to start with 0.1 position sizes. So far, it seems to work decently because I mean, this was a pretty huge drawdown. I would say using 0.05 lots, and this took, you know, what, the 23rd to 25th took 2 days. 1, 2, 3, 4, 5, 6, 7, 8 recovery trades, or I guess 8 trades total. 7 of them recovery trades, but it still worked out. We made a nice little profit, and so far we're up on the profit. We started this on like what, the 17th, and it's the 25th now. So this is like 8 days, 8 calendar days, and yeah, and it's in profit. Slightly in profit, right? $72 from just this pair alone. There's 24 forex majors and minors, and so you have many opportunities to trade many other different pairs. So we're gonna sell, or we're gonna use a 0.0, or we're gonna use a 0.1 lot. The reason I sold there is because it had a huge spike up. So this right here is one of the things where when price has a very big move up in one direction really fast, it's very likely to have a reversion back to the other side. But that's not always the case, which I hope we see that that's not always the case. That way I can show you this is a really stupid thing to do with heavy position sizing. It may not be the dumbest thing to do with small position sizing. The one thing you have to remember with DCA trading and recovery trading and grid trading and whatever you're doing, if you're adding to losing trades with no stop and your only plan is keep adding until it reverses, and you're doing this with small position sizing, even if you've controlled risk phenomenally well, you, my friend, are going to blow the account someday. You're going to feel really sad inside until you realize that you've actually grown 3 or 4 or 5 other accounts and you've doubled them, and this was the one account you blew, and so net you're still profitable. That's fine. That's what we're after here. This has gone into profit, so I'm going to close that there. I'm just going to buy because now it's gone down, and then if it goes down here to these next lows, then I'll buy again. Looks like it did. I'm just going to buy there again. I'm going to set a profit target here at these previous highs, and we will see what happens. DCA trading works amazing until you have one losing trade that like just wipes everything out. This is why it's important to withdraw every time you double the account. A lot of people just don't listen to that. They just, like, you'll see in this video in the comment section, you go look at the comments. There's gonna be genius comments underneath this video. You'll see a lot of people, maybe not a lot, but you'll probably see some people say like, this is never going to work. It will blow the account. And you know what? They're right about the last part. It will blow the account eventually. But them saying this will never work, if that means that it's not profitable to do, using like a basket of different trades and multiple different trading accounts and growing more than 50% of them to the target and then less than 50% of them blow, if that's what they're saying, it's not profitable, it appears as though they would be wrong. But again, you go try this for yourself. You know, what do I know? I'm just some bald guy with a beard yelling at you here in my kitchen, waving an AR-15 assault rifle. We've got this trade is not really doing much. Looks like it's trying to go down. We're gonna conclude this trade, and then what we're gonna do is we're gonna increase the position size. We're just gonna keep it going. We're gonna keep the whole thing going. Since it's ranging, I'm just gonna set the profit target right there. Hit the profit target. We've now made $113.54. Then what we're gonna do is we're gonna increase the position size to a 0.15 lot. So this is 15,000 in quantity. I'm going to, what am I gonna do? I'm gonna go ahead and buy here. I'm gonna set a profit target at these previous highs. I'll have a DCA risk structure to buy again around these highs. And then I'm gonna have another buy, a layer of buys down here around these lows. There's also like the lowest low right there. So we'll see how this goes. This was the 0.15. So far, what we've done is, while this trade is playing out, we've started with a 0.01 lot size. Then we went to a 0.02 lot size. And I thought we were really cool, honestly, at that point. But it turns out that it was actually even cooler to go to a 0.05 lot size. Because for this pair, AUD-USD, on this period of time, it looks like I missed a DCA trade, so I'll just watch it here while I'm doing this. On this period of time, it seems as though a 0.05 didn't perform horribly. I'm gonna add right here. So it didn't perform horribly. There was still some drawdown, right? But it came back, everything worked out. And again, it's a $2,000 account. What margin will you have to do this? You might have to have more than 1 to 50 leverage, but that's if you get into like heavy position sizing, because 0.01 on $2,000, that's fine with like 1 to 50, 1 to 30 leverage. But as you start getting heavier and heavier, like 0.1, 0.2, 0.5, that's not going to work. You're going to have low leverage. But if you have high leverage, you could probably keep doing it like until you literally just margined out the account and blow the account. So if this dips in here, I'm just gonna add again down here. So we were cool with like 0.05. Now we did 0.1. Personally, like I know this would blow really quick using a 0.1. How do I know that? I don't know. Intuition, experience. I've been trading for like 8.5 years now. I know a thing or two about price, especially on this pair, AUD/USD. However, you might be able to get a win streak that allows you to win without price going really far against you in one direction. So we're going to say it's plausible that maybe you're able to grow the account using like a 0.05 or 0.1 lot. Okay, this is what I'm talking about. So we're going to add here, that will simulate having bought at that zone. But now it's gone really far down, and this is negative $100 of drawdown. We've wiped out all of our profits that were closed in the open drawdown. Now, would this be the case if we were still using 0.01s? No, absolutely not. But we also wouldn't have grown the account this much either using 0.01s, because the trades that grew the account the most were 0.1 and 0.05 lots. So with this said, you're essentially hoping that the account doesn't get to negative $2,000 and doesn't margin you out. And what position size are we in? 45,000. So this is like a 0.45 lot size. It's almost half of a standard lot. Now, as this has gone against us a bit, I'm going to set the profit target right there in profit. So that closed there. Now I'm going to sell. Just to make it fun, we're going to go up from 0.15 lots. We're going to go to 0.2 lots. So let's go to 0.2. And I'm going to sell just because I think it's high up here on the chart. And then if it goes against me, let's just see where we can add it. We can add right here at these highs. There's a resistance zone up here. And support resistance has like a 50% chance of bouncing or breaking. Like if you're not looking at your experience. If you have experience using support resistance, then I guess maybe you're right a little more than half the time. 55%, 60%, 65, maybe 75, maybe 80% or 90%. But like if you're right a little more than half the time, like I think experience can kind of help you do that. If you're not profitable trading and you're just learning this and you're experimenting with this to try to like kind of get a feel for DCA trading and the volatility, just make sure that you're just doing whatever you want and watching what happens. I am not going to be able to teach you which support resistance zones you should draw in your chart that are going to bounce more than 50% of the time. The reason is because personally, between you and me, I don't even know how to do that. Like I just look at it and then I think I can tell when price is going up or down, like with more than a 50% chance accuracy, as long as we're looking at big picture and not trying to pinpoint the entries. Because sometimes like it goes up and I'll be like, okay, I think it's going to go down, but I won't time it perfectly. And then it will like go a little bit against me and then I'll add, and then it goes more against me, then I add, then it comes back and I still make a profit. Like I'm over 50% in that respect. But where price will bounce exactly on the chart, that's a very difficult thing to do without the context of experience. So the whole point of me saying this is like you should just have like the assumption that you have only a 50% win rate. That is what is going to matter long term. We're going to see if this can go down here. It's looking good. The trade's winning. We're just going to see if it can keep going down. And how long have we been in this trade? Right here. So June 28th. And currently it's July 1st. So 28th, 30th, and it looks like that ended. So it's been 3 trading days. So like 2.5 to 3 trading days. We're going to add again here at the resistance zone. You can see it's negative, 10, it's fluctuating, but negative $10, whatever. We're going to drag the target down here to these previous lows. The price can just get to those lows. We're going to wrap this up and call it a day. If you think it's boring watching this video with backtesting, try doing this in real life. You're sitting there, you're staring at the 1-minute chart. Your soul is being sucked from your body as you have to stare at these charts. It is really mind-numbing. Sometimes it just makes me just want to, we're just going to go check the trade. Let's go back and check the trade. So it looks like it did hit the profit target. That's good. We've ended this in $171.69. That wasn't really that funny. Okay, no, that's fine. Anyway, long story short, can this trading approach work on the lower time frames? Let's get a little bit philosophical here for a second. Maybe. I'm going to say it's plausible. I'm not going to say it's a myth. And I'm not going to bust it either. I'm going to say if you're sizing your positions appropriately and depending upon the asset that you trade, this was AUD/USD, It's not as volatile as like GBP JPY or JPY pairs, but it's also not as slow moving as like Euro GBP. Oh my God, that pair moves so slow. So it's like somewhere in the between. So it's AUD USD. I'm gonna say it's plausible that if you're sizing small enough, and if you're taking multiple trading opportunities, you're waiting for things to kind of stretch against you a decent amount before adding, meaning like don't add like a bunch of positions within a few pips of each other. If you're wrong, let it go kind of far against you to the next little area you think it'll bounce, then add there, and then approach it that way. I'm gonna say this is plausible. And what I'm gonna personally do is I'm gonna test this more, and I'm gonna talk more about it in future YouTube videos. If you're not subscribed to my channel, you don't have to. Just don't, you know what? Don't subscribe. It's fine. You don't have to subscribe. You don't have to like the video. You don't have to do anything. I'm gonna go ahead and hop off now. We've got a lot of very important things to do. I hope you guys enjoyed this video, and we'll see you in the next one. Cheers, my friends.